Hello, everybody. Welcome back to my Daily Dose with Tim. Today is season 3, episode 17. So, as some of you may know, I'm still on the road here in Ontario, having just finished the multifamily conference last weekend. And we are going to be actually touring around Ontario regions and doing a few connects. And what that means is we're going to be doing a few networking events. And the first one coming up right around the corner is June 1st, this Thursday in Ottawa. And also the next one is going to be Saturday, June 3rd in Waterloo. And then the following week, June 7th, we're going to be in London, Ontario. And so I'm going to be sharing the link in the comment section below there so that you are able to go and take a look and register. All these events are free. They're at restaurants so that you're able to grab a drink, grab a bite to eat if you like. However, just come out, mingle, meet the Stretch Your Talent community amongst other real estate investors and other business owners and entrepreneurs. So we love doing that just because I really enjoy bringing people together. And a lot of the times these connect sessions, they turn out to be great masterminds and just great networking for everybody so that you can make new connections and deepen some of the existing relationships that you already have. So anyways, I'm going to go back now to what we started in the previous episode, which is distressed properties. And so today, as promised, I am going to continue on where and how to find distressed properties. So first thing first, though, I really want to make sure that everybody is very clear about what distressed property is. As we discovered during the previous episodes, distressed properties are not always necessarily properties that need a ton of work or even a little bit of work. Sometimes these properties can be in perfect condition. Okay. And also the property type can range anywhere from piece of land, single family homes, small duplex, small multi-units, or larger multifamily, and even commercials and strip malls. Because as a result, now you understand it really has a lot to do with the property and the property types themselves. It has everything to do with the owner or the seller's level of motivation. And so again, distressed properties sometimes is very much linked directly to the phrase distressed owners or distressed sellers. And so with that said, you can see it on the screen now. I'm leveraging some of the training slides that we use as introductions here. So distressed owners, they could be financially distressed and they could be personally distressed. The idea really at the end of the day, in terms of making distressed properties work for you as a strategy, is that there definitely needs to be some sort of an incentive for both parties. Now, first thing first, though, just putting our investors hat on and putting our numbers hat on, what you want to really look for is that at the end of the day, is this property going to be worth what the market can afford and is in demand? And after that, you need to figure out if there's any sort of work that needs to be done. So what that means is, let's just say that I'm going to simplify this a little bit right now. Let's just say that renovation work is what's needed. So let's say a property in a certain market at the moment could be $1 million. However, right now this property isn't in the best shape ever. And so even though all the comparables are coming back to say $1 million, that $1 million, what it signifies or what it means really is that there needs to be a certain standards. There needs to be a certain standard in terms of the condition to reach that $1 million valuation. So potentially, maybe this property that you are looking at, the front lawn is not doing really well. The kitchen is completely outdated at this point, and the bathroom probably also needs some update. And all the fixtures, they are just worn out and old, and some things may be broken as well. Scratched flooring, all these kind of things. And so let's just say that at the end of the day, you kind of understand, maybe you have a general contractor with you, maybe you are a general contractor yourself, you are able to do an estimate, okay? There's a difference between an estimate versus a quote. So a quote is a lot more detailed. Usually an estimate, really, I kind of call it a guesstimate. So again, for most real estate investors, if you're anything like me, I keep saying this. If you give me a hammer, it's more of a weapon than a tool because I really don't know how to do any renovation work myself. And I am not ashamed of that anymore. I used to be when I first got into this industry because I just felt like that's such a crucial skill. However, what I've learned is to really work with the different contractors and general contractors in the markets that I'm in to really understand that to really understand how they work, to really align our processes from a budget standpoint, from a timeline standpoint, from a quality standpoint. Okay. So coming back here, $1 million, let's just say that you got a proper quote or you're guesstimating, let's say $150,000 worth of work needs to be done to reach that $1 million valuation. What that means is for you, you already know that right off the bat, if you're paying more than $850,000 in this case, you might be overpaying it. And the other thing is you also need to make sure that at 850, that is actually still not the price you should be tying down this property at. Don't forget that you still have fees, transaction fees at the very least. And if you're anything like me, especially at the beginning of my career too, you need to access other people's money, whether it's private or institutional, doesn't matter. You need to make sure that you budget in the borrowing cost too. So that further brings it down below the $850,000 line. And from that point on, don't forget, you have what we call holding costs as you're doing all this work as well. So you got to budget all of that in. And so I'm just going to say that in this particular case, on a very high level, don't take this as a formula. I keep saying this, take it as a thought process. Thought process is really truly what matters at the end of the day, because once you get your thought process down, you can apply any strategy in any market, any province, any state, any country. And the funny thing is, so many people stop by the Trust Your Talent Academy booth at the multifamily conference in Toronto last weekend, and people are asking, how are you different? And I've already said this, especially at the very beginning of this season, is that we focus on financial education, leveraging real estate as the asset class and real estate investing as the tool to generate multiple sources of income and long-term wealth and even generational wealth. And so what I mean by that is once you've actually gone through the entire Trust Your Talent curriculum, and we actually have North America, if not globally, the largest real estate investing curriculum right now, 16 different courses. Each course is anywhere between 12 to 24 hours on deep dive, including distressed properties, okay? And so what I mean by that is I always tell people, once you've gone through the curriculum, if you want to kind of follow my footsteps, expand if you're Canadian, for example, if you want to expand to across the border, south of the border into the US and going to the UK, all you got to do is once you get into a new market or a new country, the first two people you want to talk to are no longer your realtors and mortgage brokers. The first two people you really want to talk to first, having all this skills and knowledge and theoretical training, and perhaps even already a mentorship under your belt executed in Canada. The two people you want to talk to first would be your lawyers as well as your accountants, okay? Because you want to understand how to execute on deals, the transaction process. That's usually a real estate lawyer or even a corporate lawyer, because again, you also want to make sure that you have the proper structure set up for asset protection. And then you want to talk to the accountant to understand the income protection and the tax law side of things, because it's not about how much you make, it's about how much you get to keep. And then that way you can start your own SMP process all over again in a different country, in a different market. That's what makes it so exciting and what makes the curriculum so flexible and adaptable and transferable globally right now. And so coming back here though, the stress is the same. When I first went to the US years ago, when I first went to the UK years ago, this is how I got started. And so funny enough, last weekend, I actually got the chance to share my very first deal in the United States back in 2013. And by all means, it was distressed property, the physical property itself, as well as highly distressed owner. because my very first deal in the US was in Texas in 2013, a 144 unit mobile home park that I just did not even get trained on the mobile home park strategy back then. However, it didn't really matter because I had some experiences under my belt at that point. The most important thing in that particular deal is the fact that the seller himself was highly motivated and highly distressed. Why? He didn't care to own that piece of property because it was given to him. He inherited the mobile home parks from his father when the father passed away. And that tends to happen. And so here's the thing, and I don't mean to be morbid or anything, and I want people to understand that, and this is the way I was taught, okay? It is not about taking advantage of people. It is about taking advantage of situation. And by taking advantage, I really mean that we are, as real estate, as educated and professional real estate investors, we really got to see ourselves as solution providers to other people's real estate related challenges. So in this particular case, in my deal, my seller, highly distressed. He was a retail store manager. He said, I never really wanted to inherit my dad's business. I kept asking him to sell it before he passed. However, he didn't want to. So I took it over. But now my wife is mad at me. I don't get to spend time with my kids. I'm missing my kids growing up. I still got a full-time job. And yet, almost every night, I am on the phone with the property management company, going through statements, dealing with problems, authorizing expenses that I don't have the money for, and I don't want to do this anymore. And so, as you can see now, there's so many opportunities as educated investors for us to offer up our expertise, our knowledge, our services to help other people solve problems. And so in this particular case, this seller was not just financially distressed, he's personally distressed because it was now starting to affect his family life too, and his relationships, his immediate relationships that mean so much to them. And so that's why, where can we actually find distressed properties, distressed owners? Well, I'm going to say family lawyers is one of the great sources. Obviously, you can work directly with wholesalers. You can also do what we call driving for dollars, because when you're driving around, again, in Canada, it's a little harder to do driving for dollars because the information is not as public as, let's say, information availability in the United States. And so in the US, you are able to do a lot of driving for dollars because if you see, let's say, boarded up houses, and or houses with, let's say, even if it's not boarded up, you all of a sudden notice that maybe it looks like their mailbox is jam-packed with flyers and mail. It just looks like somebody has not been there in a very long time. Or again, in the wintertime, snow piles up and there's no snow removal, or during the seasons where there's no snow, you get a lot of unruly grass and plants growing outside of this property. Those are all opportunities because you can simply go down to the city or the county office to find out who the seller is, and you can initiate the communication with them to see if they are willing to sell. And another way to look at this is also, I know Canadians, sometimes it's really, really hard when we're looking at opportunities compared to our neighbors south of the border. However, it doesn't mean that there aren't any other ways, because so many people, they will also tend to self-manage. And so when you are driving around, you can still do driving for dollars. It's just that we look for something different now. What we're looking for would be the for rent signs, for example, outside of a building that is not put up by, let's say, a formal property management company. Usually the signs that look like they got it from the dollar store or from Home Depot and they just kind of marker it in themselves. And usually there is a personal name and cell phone number as opposed to a company with a logo on the board that says units available for rent. And so a lot of times you can actually pick up the phone, call these people, and just have a conversation. Hey, I saw your for rent sign. I am a real estate investor in the market looking to acquire more properties. I'm wondering if you've ever thought about selling your properties. And I know sometimes the conversation does not always flow as easily, and this is why this is something that we actually teach extensively in the wholesale and assignment course too, in addition to distressed properties, because it all depends on which income bucket you're looking to fill when you start looking for distressed properties, okay? Because distressed properties really is the fundamental piece, as you remember from the previous episode when we first got started on this strategy. Now, another way to do this is I'm a big fan of working with good realtors. I know a lot of educated investors, they are trained not to talk to realtors and just focus on finding off-market deals. Yes, absolutely, there might be slightly more money to be made when it's off-market. However, once you build a good relationship and you understand your own business plan and your own business vision, and you're able to align your processes with realtors, I can promise you this, realtors have way better accesses to good deals than we realize. Because I understand that even years and years ago, because the way I was trained, I somehow developed this prejudice against realtors. Yes, I get it. Their job is to buy and sell because that's how they make a commission. That's how they make money. We're all out here making a living. Okay. So I don't want to put that on them anymore, because over the years, through my own experience, I've been able to find some very decent and very hardworking realtors that really align with the investor's mindset and approach. And so they understand now, for example, if it's a new relationship that I'm looking to build, I will explain to them, you know what? I want to look at your average DOM, days on market. And whatever your average DOM is, I will double it, triple it, sometimes even quadruple it in any market condition. Because what that means is these listings are not moving at the average speed. Why? Usually, the biggest reason is that maybe it's too much work or the seller is refusing to let it go. And so the sellers that are refusing to let it go, a lot of the times, you never know at what point they will need to actually let it go. So those all become opportunities for us to discover. Okay. And also, a lot of the times, realtors on our power teams, they have access, like we called, drawing a blank here, pocket listings. There we go, pocket listings, because these are the people that are actively networking, looking for properties actively day in and day out, because after all, once again, their job is to buy and sell properties. And so properties, building an inventory is what they got to do. What we got to do as investors is not that. What we got to do as investors is identifying good deals. I mean, obviously, we got to first of all find good deals. However, if that part can be taken care of by wholesalers, by your other marketing efforts, by your realtors, then really we can now focus our energy, time, and other resources, and including money, to analyze deals, structure deals, so that we can actually acquire the deals as quickly as we possibly can. And if you've watched some of the previous episodes, you understand, and you probably heard this already, the difference between an opportunity versus a deal for real estate investors. An opportunity could be as simple as a listing, or basically somebody tells you, hey, you know what? My neighbor might want to sell. That's an opportunity. That's not a deal. A deal is something that you have already put through your deal analysis process, meaning you've already factored in your baseline, your stress testing, and your own level of risk tolerance. Okay. So at that point, an opportunity turns into a deal. More often than not, the opportunity may not turn into a deal, and that's totally fine too. However, remember though, this is also why wholesale and assignment is such an amazing strategy for a lot of investors. Because, for example, I personally never focused on wholesale and assignment. However, I have wholesaled and assigned deals out over the years. Why? Because one person's trash, maybe another person's treasure. And I know that's probably not the best saying. The way I look at it really is the fact that I will say I only wholesale for two reasons. Number one, it does not fit and feed into my business goal this year. It does not fit or feed into my business goal this year. Okay. Number two, I do not have the immediate resources to close on it, and somebody else can take advantage of it. Because when I decide to wholesale and assign a deal out, that usually means that I've already put it through my own deal analysis process. That's why it's a deal. And I'm confident about the fact that the numbers could work. It's just that it doesn't work for me right now. And I want to stay focused. Okay. And so coming back to distressed properties, like I said, I want to find out the average days on market, and then I will double it, triple it. Okay, that decision will come after you've done some market due diligence and perhaps connected and spoken to some of the realtors in the market, or found out more statistics from the real estate board locally. And so that's one way of doing it also. Or you can go on to, let's say, online classifieds. Online classifieds. So websites like Kijiji or Craigslist these days in North America, they're very, very big. And so you will see the for sale by owners, or FSBO. We call it FSBO sometimes, in case you're wanting to learn the lingo. So for sale by owners, sometimes these are great resources and great opportunities for you to discover as well. And last but not least, and in full transparency, I have never actually made this happen before. However, I've had numerous mentors and trainers in my career so far that swear by them. They will actually not look at for sale by owners under the real estate or property section on online classified sites. What they will do is they actually go and look to see if anybody is selling a camper, a trailer, a motorcycle, home theater systems, professional tools or contractor tools, or jewelry. Why? Because the theory and the thinking behind it is that most people don't let these things go because they are toys, they're doodads, they are liabilities, unless they really need to free up some capital. So chances are, again, if you're looking on the screen, they might be financially distressed at the moment, or they're forecasting to be financially distressed. And so with that said, I'm hoping that that helps you stretch and open up your eyes, your mind, about how and where you can locate distressed properties. And so in the future episodes to come on this strategy, I will show you some more pictures and also walk you through some numbers and how we can start to figure out exit strategies, okay? How we can start to figure out exit strategies leveraging distressed properties. So with that said, I just want to say thank you one more time. I know some of you guys gave me the feedback yesterday and said that you could tell that my voice was a little weak coming out of the weekend, having spoken all weekend again. And again, this is my passion project. I really, really want to help people understand real estate as an asset class. More importantly, learn financial education so that in time, nobody needs to stress out about money. And that's really my ultimate personal goal. And so through Trust Your Talent Academy, I am able to work with a group of really amazing coaches and trainers and mentors. I mean, most people don't know this. It's not a one-man show. It's not the Tim show. Trust Your Talent Academy, we have 17 people within the organization, and 14 of us are trainers, mentors, active investors, and coaches. So what I mean by that is we are teaching you a long-term sustainable business system. And that means the scalability needs to be there. And you're not a solopreneur because it is hard to maintain that. And so on that note, if you've never read the book by Robert Kiyosaki called The Cash Flow Quadrant, make sure you go and read it or listen to it. It's one of my all-time absolute favorites. Okay, go and listen to it, because I see a lot of people, they come out having just done a deal or two, or better yet, they just call themselves coaches, whether it's one person or a couple. It's not sustainable. What happens when you need support? And so with that said, again, I just believe in what I believe in. You can choose to what you believe in. However, if you're sticking with me, and I appreciate you doing so, I hope you're learning something, every day, every episode. So on that note, thank you so much again, and I appreciate your interactions, your comments, and your questions. Keep them coming. You know who you are, and I will be back here again with the next episode, continuing with the distressed property strategy. So have a great rest of the day. Enjoy the sunshine. Hopefully, if you're kind of where I am or across Canada this week, actually, it's going to be really, really beautiful. And I mean, it's the end of May already, right? So live well, everybody. I will see you next time.